Hey guys, I'm Brian. I'm going to show you how you can actually long-term invest, find stocks and other investments that you can hold for a while and profit. But there's a strategy in place. It's a risk management strategy, and it's a way that you can actually pay yourself along the way as you're position trading. Now, what is position trading? Position trading simply means when you're holding a trade for a few months, sometimes even a year or so. I even swing trade some of this, meaning that I'm holding some of these trades for a couple days to a couple weeks, and then also intraday trading, meaning that I'll take profit throughout the day as well. But this is a way that I actually trade. I even teach our academy how to do it. Investing long term while the risk is minimal. Let me show you how I do this with the Johnson & Johnson stock. Let's go ahead and dive into it. All right, so I wrote some steps that you can follow while you're doing this. So the very first thing you want to do is find a company that has strong growth potential. Okay, this can often be an IPO company, a company that just went public, and they're offering their shares for a discount. You can wait to see if it's going to drop a bit, but a company that has strong growth potential. Or you can find a company that's like a Fortune 100, Fortune 500 company where the trend continues to go higher. Now, the second thing is you want to identify a trend. And while you're identifying your trend, you want to mark your supply and demand levels. Your supply and demand levels are going to be these peaks, such as this, and these bottoms, such as this. So I'm using Johnson & Johnson, for example. And as I go ahead and scroll to the left, I see my instant demand level. This is the base. This is how you can identify your trend easily. So all I can do is just simply draw this line all the way across. And look how it meets right in this area right here. This will be my demand level. I see multiple candles bouncing off of this area here. It dropped down just a bit, but this is still my base. That's what I mean by my base. So to make it easily identifiable, I'm going to grab this text tool and simply type in demand. This is my demand zone right here. The reason why this is important is because you want to know if you're in an uptrend or downtrend overall. Now you can visually see it, but if you have a base, now you can see that this here is the beginning of your trend. So the last thing is you want to identify strong support and resistance levels. This is the key here. I'm going to show you exactly what I do here. So now that I've identified my demand, now I'm going to scroll in here and identify my support and resistance levels, because these support and resistance levels are going to act as me buying shares and then exiting only some of those shares during resistance. So this is exactly what I mean right here. I'm going to draw a trend line indicating that I'm in an uptrend, right? So something like this. I see price rising, and you never want to buy as price rise. You want to buy at a discount. That is going to attract new buyers. Whenever price is at a discount, it's going to continue to rise. So you never buy as it rises. So this is how I identify my support and resistance levels. This here is a key level as support. I can draw this all the way across, do this. And so regardless of how far price goes, because I don't know how far price is going to go, I'm not interested in buying until it comes down to this level here, which matches up right here back in November 2024. This is my level where I want to enter. So if price comes here, I'll be investing. This is where I will put a number of shares in. It can be 20 shares, 30 shares, whatever it is, where you feel comfortable. As long as you're risking no more than 2% of your account, you would enter here. So I'm going to type here and just put enter shares. This is where I'm going to start my investment, my long-term investment. Now, remember, the very first thing I said is to find a company that has strong growth potential. Okay. The reason why is because if you're going to be buying in an uptrend, you want to make sure it's going to continue to grow. Or if you're going to be selling in a downtrend, you want to make sure it's going to continue to drop if the company's doing bad. Johnson & Johnson has been around for a long time. It's in the top 500 companies in the United States, I believe, in its growth. And it has hit a demand level, which means that the growth is at a huge discount overall. So I'm looking to get in at the best discount as I find my trend. I'm looking to enter right here because I've spotted the support level right here. If price comes here, I'm entering. Let's just go ahead and give a number here because I want to make this as realistic as possible. Let's just say 30 shares. If price comes here, 9 times out of 10, price will reject because it's attracting buyers from this level, and price will continue to rise. As it rises, you're holding those 30 shares, and you want to identify a resistance level. This will be considered a resistance level. The key to this is to be a master of identifying levels. If you do this over and over again, you have a journal to show that you're mastering these levels. You are confident in this. You don't have to guess. And when you're on the high time frame, like the daily time frame, the weekly time frame, sometimes the monthly, it will show you these levels a little bit better. So here's my resistance level, and I'm going to release, sell some shares, and let's just say 10. I'm going to take out 10 because 9 times out of 10, because this was a strong level in the past, it's overbought and price is going to need to drop and do something like this. This is called paying yourself, okay? Because I sold some shares, I paid myself from these 30 shares. I paid myself here by selling 10 shares or exiting 10 shares, and I'm going to be holding the 20 shares. The reason why I'm holding those 20 shares is because maybe price may continue to go higher. If it does, and you're still being profit from those 20 shares below here. But if not, at least you paid yourself some while those 20 shares drop in value a bit. Okay. So you want to identify that. Now it could drop back to here where you initially started. And if so, that's when you will start over and add more. You already paid yourself. You're completely fine. Right. So if it drops, you want to identify how far it will drop. More than likely, it'll drop around here because this will be our resistance level where it bounced off. Remember, here's our resistance level if it bounces off right here. So you're identifying these levels as price continues to move. Now, through all of this here, you want to make sure that you're staying up to date with their earnings report. If you're on TradingView, I like to have my earnings report reflected here at the bottom where you can click it. It shows you the date and when it will be happening. As price moves down, this could be another opportunity to enter more shares. So I'm going to put enter here. Let's go ahead and put enter 5 shares. Now, what you have is this 30 shares you initially entered here. You sold 10 of them up here, which leaves you with 20. As price pulls down to this zone right here, you entered 5 because now it's on discount. It's attracting buyers. Now you have 25 shares in altogether. If it drops down to this level, don't worry. Remember, you paid yourself. You're in it for the long haul, meaning you plan on investing for a few months, maybe even years or so, depending on the volatility of Johnson & Johnson. We researched Johnson & Johnson. We know that it's going to continue to climb. We looked at their data. We looked at their earnings report. We checked out statements from CEOs. There's a process with this. This is what we teach in our academy. As it drops here, you're entering 5 shares. 9 times out of 10 is going to rise. Let's just say it drops a little bit here. So those 5 shares you entered are now a bit negative. You're still positive with these 20 shares below here because you released 10 because it's still higher than your initial entry right here. You're still positive. Remember that. You paid yourself. This is inside of your broker account. And you transferred it into your checking account. And you have this much in your account now, these 10 shares, wherever you sold. You're still profitable in this long-term trade. And let's say it continues to climb in our uptrend because we already identified our uptrend. Now it comes back to this level. Your 5 shares are in profit, surpassing this resistance zone because the whole purpose of an uptrend is that you're creating higher highs and higher lows. Here's our trend line right here. You can see how price is respecting our trend line, is respecting our horizontal support and resistance zone. And as it climbs, you need to know where your next resistance zone is because you're going to start selling more shares. This is when you look left for clues, right? Looking left is how you identify your support and resistance zones. Okay. So here is a level right here that I'll be interested in possibly selling. And sometimes you have to look left a little bit further, but whenever you see a cluster of candles or a peak or something like this, 9 times out of 10, this is a nice resistance level because this was previous support. Even here, previous support. So this will be a level where you would exit your trades before it gets there, right? So you want to exit around this area right here. Let's go ahead and redraw that. And let's say you exited some shares. Remember, you have 25 shares in altogether now. Let's go ahead and exit 10. Now I have a total of 15 shares riding from the beginning all the way down here, and also these 5 shares here. You paid yourself 10 shares. It's in your bank account. You paid yourself. You can put that in a high yield savings account. You can buy something with it. You can pay your bill, whatever it is. But this is long-term investing. And you can see how it continues to grow. Now, remember in the beginning, I said you want to find a company that has strong growth potential. The second one is identifying a trend, mark your supply and demand levels. This was my demand level. Here is my supply level right here. Remember, the goal is to maybe make it back up to here. You're going to be holding this for some time. Now, if you want, you can exit earlier than this. You can just take it and leave it, depending on how long you want to stay in the trade, depending on your commission and things like that. It's completely up to you. But this is what I do all the time. So here's my supply level right here. Looking left for clues, and I can see that there's some potential to continue to climb from looking in the past. Just in January 2023, Johnson & Johnson reached a peak around $180 per share. Currently, it's trading at $152 a share, so it has some growth potential. But right here, the supply level here is my current goal. Your resistance level is where you sell some of your shares. Your support level is where you start buying more shares. And when you're selling it, you're paying yourself and putting it in a separate account so you can pay bills or do whatever you want with this. This can be part of your retirement portfolio. So guys, this was a really quick video of how you can actually use this. This is actually a risk management strategy as well. You only want to buy when price is heavily discounted. That's why you want to find a demand level or find a company that recently went IPO that has growth potential. I talked to my stock students earlier this year, and we talked about Reddit, for example. Reddit is a social media company that has been booming, and they recently went IPO. Here is Reddit right here. This is when they went IPO, $50 a share on July 14th, 2024, just recently. And look at this growth potential. Reddit has been around a long time. A lot of people respect Reddit. Social media is high. And guess what? Just a few months later, not even a year later, now they're trading at $208. If you invested here at a discount, you have to be able to hold the dips. Don't worry about the dips. Worry about the company. Do the research. Reddit is highly sought after. Everyone loves Reddit. It is a household name social media company. From just a few months, it has risen significantly. And you can see that how you will continue to pay yourself simply by identifying your support and resistance levels. Now, the only thing with IPO companies is you don't have price action from the past to go with, right? There's nothing here to look left for clues to identify your support and resistance levels. But that's the beauty of IPOs. They typically rise in nature, specifically if it's a popular sector like AI or social media, for example. So guys, this is a tip. Let me know in the comments if this is something that you would implement. Let me also know if this makes sense as well. I've been doing this for years, and I've been doing this as a way of retirement, setting it aside. And I think it's smart to hold on to it, but you also want to be sure that you're aware of your earnings reports for these companies, because you can take a dip or it can actually even boost you. So be aware of that as well. Also be aware of high impact news globally that can impact your sector or even the company as well. Be sure to like, subscribe if you haven't already, share this with a friend, and let me know your thoughts on this. Also be sure to give this video a thumbs up, and I will see you in the next video. God bless you.